This week, Nigeria's market gave investors a lot to think about. Equities push higher, bond yields continue to move. The Naira stayed under pressure. The global tensions sent global crude oil prices sharply upward. So the big question is this: where should investors be looking right now? Energy and banking sectors still the place to be? Are bonds becoming more attractive again? And could this oil driven rally create fresh opportunities or new risk for the Nigerian market? So, in this episode, we break down what moved the market this outgoing week, the sectors to look out for, and what sectors look most promising. The key risks to watch in the equities, bond, and the FX market, and whether the current global tension could spill into something much bigger for investors in the coming weeks. Joining me to really discuss this topic is Dipo Ajayi. Dipo Ajayi is Vice President and Head Fixed Income at Chapuhi Denham. Dipo, how are you today?
Yeah, good day, Dr. Tony. Thank you very much for having me again today.
All right, it's always my pleasure having you on the Edge, Deepo. And thank you, everyone watching, and thank you for joining us. If you are new to this channel, please like this video, hit the notification bell so that you can always be notified when we have new episode, and also subscribe to the channel. We are here every weekend. Reviewing the financial market and providing context and insights to investors on how to position themselves in these times that we are in. So, welcome, and I'm glad that you stopped by on this channel. All right, Deepo, let's start. So, what stood out for you most about last week's performance across equities, bonds, even the FX market, and what's your overall sentiments about the market right now?
It was actually a very interesting week all across the market. Is it about the volatility that we saw in the FX market I want to talk about, or the yield that's actually continued to be on the upward trajectory on the
Hmm.
bond space, or the resilience that the Nigerian equity market are actually presented? It's actually been a very, very interesting week. On the FX side, the market was actually very volatile. At a point in time during the week, we saw FX actually reverted back to the 1400 region.
Levels, yeah.
And that was on the back of the current global crisis that we're currently going through. And as a result of that, we noticed pockets of pressure on the FX market. And the central bank that has also shown clearly that they are not there to actually defend the currency, but to actually regulate the market appropriately. So there was no panic on the part of central bank. They only intervene when there's actually need. And we noticed that towards the end of the week, we saw a return of foreign investors back to the market. And for me, I think foreign investors seeing Naira actually touch 1,400 region sounds like another level of gold mine for them. Because if the expectation is that you expect Naira to actually appreciate this year, so it simply means that coming to Nigeria when the currency is around 1,400, and also investing like an instrument, let's say NTB, where you can actually get a 20% effective return. All in all, it means that you can actually walk away both from the currency side and also from the asset side with over 20% worth of return back out for a year. And on the bond side as well, we continue to see more like an upward movement in yield. The yield actually crossed the 16% levels
Yeah.
conveniently. Market currently trading north of 16%. But the concern is the long dated instruments, which are more like the 49, the 50, and the
53s.
2053, they remain at that low level. And well, I've actually mentioned before now that these instruments are currently in scarcity. They are currently scarce in the market. And don't forget that the buyer of this instrument, they are PFAs and insurance companies. And these instruments are actually in high demand. And that's one of the reasons why we notice that we are not seeing impact on that segment of the market. But when you look at equity market, it was all fun. When I mean it was all fun. As we speak currently, Zenith is currently trading at 95, 95.
That was
That is
surprising when I saw it as well.
very close to 100. And also, GT is knocking the door with 120. GT is currently trading at 117 naira as we speak currently. And it sounds somehow because when you remember that just some months ago, maybe about 12, 13 months ago, this company, they were in the market for IPO. And GT came to the market around 45 naira.
45
and
naira,
meaning
yeah.
that they've done close to about 200% gain
200%.
between then and now. So it tells you that beyond the global crisis, Nigerian market has actually shown that level of resilience. Foreign investors truly believe that the market is actually underpriced, and Nigeria market is actually showing that great potential, and that's why we continue to see an investor coming to the market, and beyond the external investor as well. We've seen that local investors have fully risen up to that challenge. We are seeing more participation of the domestic investors now in the market. So if foreign investors are actually leaving the market, you have uptaker that is waiting to actually uptake from you. And that's one of the reasons why we didn't see that huge impact on the equity side.
Great one there, Deepo. But one thing that's a bit worrying or concerning, or something that I really want you to kind of help with, is so crude oil prices went up, right? So Nigeria's major source of revenue is from crude oil, and then we are supposed to be earning more in dollars. Then suddenly, Naira began to depreciate. Is it because of flight to safety, or what caused that?
Well, mentioned earlier on, the central bank has been very careful to actually be in the market currently. Don't forget, something like this happened sometime here, of April. I think it was the Liberation Day saga, where we noticed a bit of pressure on the FM window. The currency actually depreciated to around 8,600. And now where we are now currently here, we are now around 1,300 and something less. They are very not to actually create a bit of panic in the market because in central bank, imagine central bank coming to the market just to salvage the currency. The currency does not have that root to actually hold its stability. And I guess that's one of the reasons why the central bank has been very careful in actually intervening in the market. What we have seen is more like panic beyond the foreign investors that were in the market trying to actually fly to safety. There are also pockets of local investors too that have future obligations. Imagine you having an obligation maturing in like eight months time, and in your head you already feel that by then and the currency should be around 9,300 or even lower. But now that you are seeing this panic, you don't know how far this can go. A lot of them are currently now hastily closing their positions, and that also created that level of demand window in that segment of the market. So it's not unexpected that we'll see that level of demand in the market, and that's one of the reasons why the currency depreciated. But however, we'll see more inflow of income of FX into the market in the later part of this week. We noticed that there are pockets of foreign investors that actually came to the market, which also helped to actually stabilize the currency. At a point in time, the currency actually reverted back to around 1,370 naira levels. And on the side of generating revenue, of course, you are right, because currently there's a better accretion to the reserve. And the central bank made bold to say that through the central bank governor that Nigeria is actually insulated from the crisis that we are seeing in the Middle East. And I think what it means is that in terms of the currency, And he has also mentioned that the era of actually seeing the currency depreciating anyhow is gone. What he's
Um,
saying that the central bank have better power to actually stand and actually defend the currency, which also make a good sense. What we have seen that the central bank governor has been making statements that shows that they have confidence in the currency, and which also has actually exuded that level of confidence from foreign investors as well. So I think it's a matter of time. We'll see the currency revert back to comfortable 1,300 levels because that looks like more like that, the trajectory. Because if you are
oh,
seeing this level of volatility and the currency is still trading within this range, it tells you that the currency is still very much strong.
yeah, I agree with you. But one thing that one might begin to wonder now is so with the Brent crude now spiking above 100 before retreating to somewhere between 97 and 100 due to the Middle East conflict fears. Are there risks like inflation, Naira weakness that you think investors should watch closely in the coming weeks? Do you think this is a possibility?
Well, for inflation, I think I agree, but for Naira weakness, we may not see anything extraordinary in that regard. That one of the reasons why I feel that, like I mentioned, this current saga is two-edged sword to Nigeria. On the side of revenue, to the government, it sounds very good. But when I look at my pocket, of course, my real income has dropped significantly between 28th of February and now. Before now, I used to buy a liter of gasoline at around 750 naira. Now, as at the last purchase, I bought at 1,230 naira.
Wow.
So it gives you of that has been. And don't forget also, this will also have other effect on other aspects of cost. Because of course you expect that to actually order the prices of goods. So when you look at it from that angle, of course it's so clear that we likely see inflation actually inch upward again. It simply means that the work that the central fiscal policy has been doing to continue to tame inflation. This could also just disappear just on the back of what we are currently going through now. This is more like an exogenous factor. Nobody's expecting this for this, and it actually just showed up. And funny enough, some of these things I've thought about it. How do you hedge a crisis like this? Do you hedge by actually stocking up? Do you hedge by actually just closing your door? It doesn't sound like there's any good edge that will not
Yeah,
present
available in the
some level of
market
basic
right now
risk
to
onto us. So I think inflation is expected to actually go up, and on the part of the central bank too, it simply means that the days of expectation that we'll see an aggressive rate cut may not be close like we would have expected. For now, we were expecting by May, we may likely see rate cut on the part of the monetary policy guy. But I think based on what we are currently seeing now, I doubt there's anybody expecting any rate cuts anytime soon. Now, what we are also all expecting is that survive by first. At least we can survive there. We can see rate cuts.
Yeah, I agree with you. I think now, I agree that we really don't know how this will end, and it then begins to appear that the central bank was wise when they decided to just cut the rate by 50 basis points. Even though we cannot give them any credit to say that they anticipated that this was going to happen. But obviously, we're now seeing that it made sense that they left rate just by cutting rate by 50 basis points. But Deepo, let's
I
talk
think
about,
I, I think I
yeah,
think they actually anticipated it because when you look at the post, when you listen to the post MPC meeting, they
okay.
mentioned global tension as one of the reasons why they were not very aggressive in the rate cuts.
All right, okay. So I mean, well, they can have their flowers then. So Deepo, global oil prices have, risen sky high, and the NGS heavyweights continue to rally. The energy stocks, the banking stock, you mentioned GT, you mentioned Zenith Bank. The all share index is rebounding this week after a lull, I think midweek. So, where do you see strong opportunities for investors? And how sustainable is this momentum given the current conflict? And especially if this conflict drags on, where do you see opportunities for investors?
Well, there's a direct correlation between this crisis and the oil and gas sector. So it simply
Mhm.
means that names that actually plays in that oil and gas sector, the Seplat, the Abradel, the Oando, and don't forget that Oando has moved from around 40 naira. Now it's currently trading north of 50 naira. So any stock that actually any company that are actually playing in the oil and gas sector, of course, you expect them
Yes.
to actually benefit from this crisis. So for me, I will put my money in this sector. Another sector also that I think also is weathering the storm very well, and I will look at names like MTN. MTN currently trading around 770. The expectation is that before the end of the year, this stock will trade north of 1,000 naira. There are some analysts that are looking at 1,200 for MTN, and this company is actually heavily printing cash. So I will look at MTN as well. And beyond that, we also know the banking sector also and they also benefit from this. Why they will benefit is the elevated interest rate levels. So it means that they can continue their interest income will continue to actually post a great level of revenue because
Yes.
yield are actually high now. Treasury bills, year treasury bills now are 20% effective yield, and there's more insurance now that will give a so when banking sector also should actually benefit from this. So for me, I would look at the banking sector, I would look at the telecom sector, and I also pick the gas sector as
The
and
oil and
also
gas.
beyond that as well,
Yeah.
treasury bills. Treasury bill market too. Rate yields are currently at 2019 80 levels, 20% levels now. And don't forget, these are short dated instruments. When I mean short dated, they are just 1 year instruments. So having that level of return, a 20% return for a 1 year paper, is not actually a bad one for anyone looking to actually invest. And also, I also say that on the bond side as well, there's another grace levels for investors that actually means the opportunity at a point in time. When yield was trading at
15.
17%, I
Okay. Yeah, I mean, you were saying that when yields were trading around 17%, some investors missed the opportunity.
to
Yeah, continue.
buy some opportunity. Some missed the opportunity. Yield went down as low as 15.30. And I'm sure when yield was at 15.30, I'm sure when yield were at 15.30, a lot of people were like, oh, the yield is trading around 16 or above 16, they will actually take the advantage of the market. But now yield is back at 16%. So it's also another room for people that actually made the last opportunity to actually gain. The long-term view of the market for this year is that yield will likely touch around 14.5, and that is not impossible considering the trajectory of the market. The only limitation currently is the crisis happening in the Middle East. But I just feel
Yeah.
that a time will come when market will fully price this thing. Don't forget that at a point in time, market reacted to the crisis between Russia and Ukraine. But here we are now. Whatever happens there, market is not feeling it again because the risk have been priced in. So I just feel that it's just a matter of time. The market will fully price the risk in the Middle East in, and market will trade appropriately. And so that's what I'm saying is that the all segment of the market is actually bringing to table a very great level of return for investors that are looking for where to actually push from.
Okay, that's interesting. I think so. Investors can look at the oil and gas sector, can look at the telecommunication sector, and the banking sectors. I think you mentioned names like Aradel, you touched on GT. In the banking sector, you also touched on Zenny. Are there other stocks you like in the banking sector?
Well, I like Zenith. I like GTA. I like Access Bank. I like Wema because we've seen a great transformation in that bank. Uh, Wema now currently posting great level of return, and also I'm sure they have a very good management coupled with improvement in their tech segment of the bank. So
Yeah.
I like Wema as well, and also um, I like UBA as well. I like UBA as well at 42, 45, 42 there. I will actually buy UBA at that level. So the tier one banks are actually very good, and also Fidelity Bank is also another level, another bank also that I feel that investors should actually keep their eyes on.
And on the telecom sector, you like MTN.
Yeah, I like MTN. I also like Airtel. But the problem is that Airtel is always on full bid. So you find it very difficult to get sellers to sell to you.
Okay, so that means investors can go and position there. Hopefully, they get to be able to buy. Okay.
Yeah.
Yeah. So deep what the while the U.S. and European equities swing widely from the Iran conflict headlines, Nigeria's market has held firm. As you mentioned earlier, we year-to-date gains around 26%. So, what risks from the global sell-off or profit taken could emerge, and what defensive or growth plays stand out for you in the weeks ahead? How should investors be looking at this? Because we're already seeing that sell-off in global equities.
Well, like I said, the sell-off in the global equity, it seems that Nigerian market sounds insulated. We're not
Mhm.
actually affected. And I mentioned something. I said because we have a great number of local investors, that also help the activity in that in Nigerian market. The pension guys are actually very active in the market. Insurance guys are very active in the market. The asset managers also are actually are also very active. We have local brokers also playing that role, and also individual investors are playing great role in the market currently. The confidence in the Nigerian markets actually on a high level, and that's one of the reasons why even when there's a bit of panic, you tend to see investors that are ready to actually lift you at that level, and that's one of the reasons why you seldom see an aggressive sell down in some of the good names in Nigerian market. So for me, I think the only risk that I think could actually affect the market is in terms of bad financial. Currently,
Yes.
this earnings season, we'll be seeing a lot of companies showing out their results, and we've seen a couple of great results. Reverse is the case, I think that will actually affect the valuation, and as a result of that, we may likely see a bit of sell. So a lot of investors are currently holding their stock in expectation for dividend. Of course, you have qualification day around April and beyond April. So a lot of investors are actually waiting for dividend income are currently holding their stock. So they don't feel this is a good time for anyone to sell. They feel it's a good time for you to hold and actually earn your dividend income. And that's another strong point that is actually be more like creating that great support for the market. So for me, I think the only risk I can see is in terms of the financials being posted by some of these companies. And that could be only the risk that could actually affect the activity in the market.
Okay. I think we continue to watch out for that, and investors can continue to monitor those results as they come out. Dipo, let's switch gears a bit and talk about the fixed income markets. So the bond yields have risen, as you mentioned. I think we're now seeing yields around 16% amid the global sell-offs and oil-driven dynamics, that we're seeing from the Iran conflicts. But the demand for the Nigerian debt instruments remains solid. So what does this signal for fixed income appetite, and how should investors position themselves for what are potential rate volatility from the geopolitical shocks that we've seen?
Well, for me, I think the strong point for the fixed income side is the level of liquidity in the market. The central bank has been to the market couple of times in the last 8 days, and they've done close to 4 different home auctions, but nothing
Mhm.
substantial has been issued. And the message that sent to the market is that the central bank, even they are not ready to actually bought to push rate further high because they are
Okay.
not desperate to mob the liquidity at any outrageous rate. And so it tells you that the market direction still remain that yield still remain downward. And that's one of the reasons why you tend to see a lot of holder of Nigerian instrument continue to hold the instrument because the body language of the central bank is not showing otherwise. And on the part of the DMOs as well, if you notice the last NTB auction, despite the fact that on the 1 year paper, we have over 2 trillion as subscription. The DMO was actually very disciplined to actually take just about 700 and something billion so as to keep rates at reasonable levels. So when you look at that very well, it shows that on the part of the monetary policy guy and the fiscal policy guy, they are also looking to actually drop rate. And if the goal is to actually reduce the cost of borrowing, so it means that whoever is holding instrument now won't want to actually sell off now because you know that what you are currently holding is gold.
Yeah, but Dipo, do you think that given all that is going on now and given the direction that we're moving previously, does it make any sense for the CBN or the MPC to contemplate raising rates at all?
Well, I don't think we have reason to raise rates because, like I mentioned, we have been very cautious in the past, and that has paid off for us. They factored that in their last minute meeting, and that's one of the reasons why we didn't see that jumbo rate cut that we were expecting.
Hmm.
So when you look at what has happened, and also don't forget that where is inflation currently? Inflation is around 15 levels. Where is NPR? NPR is about
Six,
26 point,
6.5.
26.5. It means that we have headroom of about 8,115 basis points. Sorry,
Yes.
8,150 basis points to play with as a cover for inflation. So I don't think that there's any reason for us to look at actually raising rates. Rather, the monetary policy guy will actually, or the central bank will actually deploy other methods, like what I said, homo issuances, to actually mop liquidity in the system so as to find a way to actually reduce the impact of inflation.
So, as the Iran war drives oil prices, it continues to fuel expectation for inflation. And we've seen that putting pressure on global yields and currencies. And we know that that could also impact the Nigerian bond market. So, are there any protective moves, diversification, duration plays that you could advise fixed income investors and who may also who may also have like FX exposures as well?
Yeah, for fixed income investors, there are a lot of opportunity in the market, and that's one of the reasons why we broke it out down earlier on.
Mhm.
For people that are actually very willing to take risks, you can just lock your money in short-dated 1 year paper, and in
Okay.
1 year's time, it's 20% return. 1 year time, you roll in into wherever instrument is trading at that particular point in time. And for investors that are actually also very weary of currency risk as well, you can also diversify into Euro bond space as well. Currency we have seen in the past weeks, days, we've seen yield actually inch up across board. It's not even peculiar to the emerging market. We also saw same thing happening to the US Treasury as well. Rates have actually gone up. So it simply means that it actually presents a better return for investors looking to actually diversify into that market as well. You can see names in the Eurobond space that could actually still give you close to about 8% return in a dollar denominated instrument. And so that's another way to actually hedge yourself if you are actually very careful or you are scared of the current volatility in the FX space. And also, if you are someone that feels that, oh, you can always weather the storm, that's storm. And that's one of the reasons why we said that looking at the belly of the curve would not be a bad idea as well. Because currently yield are not of 16%. And don't forget, this don't want to, it means that you enjoy this level of return over that level, over
The
the
remaining
year of
term.
the so looking at something like a 2035 maturity, it means that for the next 9 years, you will enjoy that level of return over that a long time. So it simply means that there could be volatility in between. But when you smooth that out, there's every likelihood that the yield could actually ended up actually trading below the 16% that you're currently holding over the life of the instrument. And like another aspect also is the equity market that we have mentioned for people looking
Yeah.
to actually take advantage of return. You can look at, we mentioned the oil and gas sector. That's also a way to actually enjoy from the crisis. Of course, as much as everybody is looking, praying that this should stop, also as much as you are losing on the on one hand, based on the cost of living that's actually
Gone up, but you
skyrocketed.
can
You
be
can
enjoying
you
from
can you can
the
also
return on your
enjoy from the
investments.
other return on the other side by actually investing in the names that we have mentioned in the oil and gas sector.
All right, Deepo, that's okay. Let's switch to the global market now, looking at global dynamics and Nigeria's position. So Brent is trading currently, I think, maybe above 100 at the last time I checked. And the threats to the Strait of Hormuz. So global oil prices, global equities, we've seen that volatility. But energy stocks continue to gain. So how is this featuring into the Nigeria's bond market, the equities, Naira, and what short-term spillover should watchers expect? I know you already talked about some of this, but I'm really concerned about the global market now. Investors watching the global market, seeing prices drop. But in our market, we've seen the stock market gain, except for the fixed income side where we've seen yields go up. Are you expecting a possibility where we might begin to see spillover from the weakness that we're seeing in the global market in the Nigerian market?
Of course, don't forget that, as you mentioned, now it's not a global market. So it means that there's this contagion effect. It's
Yes,
just a matter of time you start feeling it. Don't forget that what's currently happening in the Middle East, we are feeling it as if we are currently in the Middle East because of
yes.
the cost of living that's actually increased. And this is not peculiar to Nigeria, it's across the globe. The European countries are also clamoring for the stoppage of the crisis because of the impact on their living as well. So
Sure.
Nigeria is not totally exonerated, of course. We'll likely feel the impact. And like I mentioned earlier on, we're already feeling the impact. I will feel that this will actually worsen because if the prices of oil continue to go up, of course, we'll continue to feel it harder because just last week, Dangote, which is more like the major supplier to Nigeria market, increased prices 3 times. And of course, we understand because we notice as the price is going up in the global market as well. Don't forget the replacement cost model. Of course, he has to adjust his price in the same manner. And also, the pump prices are also being adjusted in the same manner. So now imagine if oil price now actually touch $150, you can understand the level of what that will be on an average Nigeria. As someone made a joke today that even minimum wage is unable to actually fill a tank of his car. So it gives an idea of what people are currently going through now. And that's one
But
of the reasons why
Deepo,
I also feel.
sorry, Deepo, sorry for butting in. Do you think, I know that the Nigerian government has ended anything about subsidy. Do you think it's I mean, it might be worth considering, given what is happening now, to have some form of cushion to support the citizens, to have maybe bring some subsidy to help citizens around at this period.
I don't think I agree with that, and because you and I know that when you create any opportunity,
Yeah, I think I lost you momentarily there. Can you take can you come back with your
localities,
thoughts? Yeah.
we've seen the Lagos state government they've done. Yeah, I said that. I don't think I agree with that. Don't forget that if you open a little door for Nigeria, the next thing is that begin to see corruption around that level. At the end of the day, an average Nigerian may not even feel the direct impact of what the government is doing. And at the end of the day, we'll continue to post that huge cost into the government budget. So I would not agree with that. And I said that I said something that I was seeing the government actually they've done something in the past that actually helped to reduce the impact on an average Nigerian. There was a time where they actually slashed the price of train
Yes.
transport by 50%. So what it
Yeah.
simply means is that to actually reduce the impact of the people. And also there was a time where Lagos state government also rose up to the challenges by actually coming out to actually reduce the BLT buses. They discounted the bus fare by 50% as well. So I think that if the government can actually look at something in this area, that could help to actually minimize the impact on Nigeria. But I don't think it will be worthwhile for us to look at actually bringing back into subsidy.
Okay. So Dipo, some analysts are beginning to ask whether the prolonged shocks from energy prices to the global liquidity conditions could expose vulnerabilities in the financial system. I know you're a chartered financial analyst, you're a chartered accountant, you're also chartered in alternative investment. So, from where you sit now, Deepo, when you look back at what happened in the 2008 financial crisis, so what's happening globally now? We're seeing global oil prices rise, geopolitical conflict, volatility in the markets, tightening financial conditions. Do you see any parallels with the early signals that preceded the 2008 global financial crisis and today's current happenings, or are they fundamentally different?
Well, I think if we need to look at it broadly, you will say they are fundamentally different because currently
Yes.
what's happening currently is more like a tension in a particular zone. And the tension was on the back of attack on a particular country, and that has actually dovetailed to where we have found ourselves currently. And don't forget that these things can be resolved in just one day if all this, if the country involved can actually come to a table and actually settle the misunderstanding, I'm sure immediately market will revert back to status quo and will be as if something of such never happened.
Never
But when you
happened.
look at what happened in 2008, it was a real global financial crisis. It was a subprime crisis. It was a mortgage-backed security crisis where credits were written on mortgage security and it's being traded in the markets. And when it got to a level where there was low confidence in that asset class, people began off on the asset class, and that actually affect the whole market. And I don't think something of such can actually happen again there because after that, there's a lot of changes that have been done to actually ensure that something of such never repeats itself. But can we still see get to a level where we can actually see something that is very close to that? Of course, it's very possible. And why I say it's very possible is the impact, the end goal, or the end impact of what is currently happening now. At the end of the day, if we don't actually stop this or find a way to actually settle the current crisis, at the end of the day, we may get to a level where the global economy can actually go into recession. And don't forget, when the global economy goes into recession, we know what will happen globally. And currently, I doubt any country can actually boast that the projected growth for the year, that they can actually still meet the projected growth for the year, considering the level of ground that we are currently losing now. If this continues, there's every tendency that a lot of countries will actually meet their growth target for the year. And some of the countries can even actually drop into more like recession because and some can even get to a level where you are battling inflation at the same time you are also battling growth as well. So when you look at what the impact could be, of course, the impact could sound like what we saw in 2008.
In 2008.
Yeah, but when you look at the cost overall, it is not the same issue. This is purely asset class that actually markets lost confidence in and actually change the whole market dynamics and actually boomerang into a global crisis that actually affects global markets.
Entire financial market.
Loss of confidence was one of the key things that actually drove that aggressive sell down that we saw within that period. But now it's just a crisis. So markets are also very sensitive that you have to be very careful. If you sell down this asset class now, what if US, Iran, and Israel decide to actually settle the crisis? Of course, it means that you have actually taken a wrong decision in that direction. So that's one of the reasons why I feel that they are not totally as but when you look at the end goal, if we don't actually stop this now, of course, we likely found ourselves where in the position of what happened in 2008.
Yeah, I agree with you. At the end of the day, to take the parties to sit on the table to be able to come to a resolution of the crisis. So, Deepo, let's begin to coast home now. Let's begin to round up. So, summing all we have seen this week, the resilience in the equities market, rising yields, the pressured Naira, and the massive oil surge that was seen from arising from the global conflict or the Iran conflict. So, what's the top actionable insight for investors, and what's balanced strategies would you recommend for investors going into the coming weeks, especially if this volatility and the oil conflicts, the crude oil price continue to increase?
Yeah, for investors, I think I've mentioned some of the things you need to do. You need to look at your current portfolio holdings, and if you are new to the market, of course, it gives you an advantage to actually look at where to actually put the fund. And we mentioned that oil and gas sector are actually playing a very great role in the market dynamics currently, considering what is happening globally. We've seen oil price move from 70 levels to north of $100 before reversing back to sub $100. And that is actually very, very good revenue for some of these oil and gas companies. So I feel that investors are going to the week should keep their eyes on what is happening in that segment of the market. The banking sectors as well. We mentioned that they continue to print good interest income, considering the elevated yield in the market. So I think that investors should also keep their eyes around what's happening in the banking sector as well. Currently, the banking sector is actually, the Nigerian banks are actually very strong, considering the last recapitalization exercise. Yes. So it simply means that some of them have more money to actually to play with now. They have capital to sweat now. And so you actually need to actually put your eyes around what's happening in that sector. Because there are a lot of opportunity there. We mentioned the telecom sector as well. We like MTN because of the business strategy, the acquisition as well. Don't forget, MTN acquire MTN Global recently acquired IHS recently. So it tells you an idea of that the company is actually forward looking and And by April, or they're also paying the dividend of 15 naira for investors that are currently holding their instruments. So it gives you an idea of the level of opportunity that actually brings to the table. And for me also, I like the treasury bills as well. Yield at very good levels currently as we speak. You may not see that in the next
Maybe in
2
Q3.
months. Don't forget in January. In January, we saw 18 to 7 discount rate in January, and that was about the first auction for the year. But here we are now. We are currently around 16,870 level. That's about 150 basis points from at the first issuance of the day of the year. So it simply means that the next 2 months, you may not even see 15% levels as well. So opportunity for investors that are not ready to actually invest for a long time, but looking to actually take advantage of a short-term investments to actually look at what's happening in the market as well. The market also needs to actually consider there are pockets of commercial papers that have been coming to the market. Just last week, Sunbet was in the market. Sunbet is more like it's a cocoa aggregator, aggregating company, and they're actually doing very well in that segment of the market. They raised a CP of about 160 billion in the market last week, although what they offer was about 100 billion, but they ended up taking up to about 160 billion in the market, and I think the yield was over about 23 or not 23% yield, and that's also a very
That's a
good one for
decent
investors
return.
looking for alpha in the market because these are also short-dated instruments.
Instruments.
Also for people that also you are currently holding dollar and you are scared, what do I need to do? How do I need to do? I think it's more of your risk appetite currently. If you have a low risk appetite, you can as well just invest in dollar-denominated assets. There are pockets of there are a lot of dollar funds in the country where you can actually invest your money, and also you can also invest in Eurobond space as well. This also presents a very good opportunity for you to actually hold your assets in dollars. But if you are someone that can actually take risk, I think actually converting your dollar at 1,400 and also investing in a 20% yield instrument will not also be a bad idea for someone that can actually take that level of risk because it simply means that if at the end of the year the currency is still at 1,400 and you are at maturity, you can convert back into dollar, and it will simply mean that you have earned a 20% return
20%
on your
return.
dollar asset, despite the fact that it was on a Naira denominated asset. So when you look at this pocket of investment, is left for investors to actually see where they actually fit in, considering their risk appetite.
All right. Thank you so much, Deepo, for your brilliant and insightful analysis. As always, always a pleasure having and chatting with you about the financial markets, and especially these troubling times that we're currently experiencing, the crude oil crisis, the global crisis coming out from Iran. Thank you so much, Deepo.
Thank you very much, Dr. Tony, for having me again today. It's actually a pleasure to be on the program.
All right, and everyone, thank you so much for joining us today. And if you are new to this channel, please like this video, subscribe to the channel, and hit the notification bell. We are here every weekend analyzing both local and financial markets and providing context to help investors think through the investing plan and provide guidance. So thank you, and we are out. Bye.